All right, let's take a look at your money here. So the Fed, the Federal Reserve, is wrapping up a two-day meeting today, and you're wondering, like, what do I care? You know, how does that affect me? It could hit you in your wallet. So we have KRIV McBride with bankrate.com. Hey, thank you for your time this morning. So let me just ask you here. The Fed is who comes out and says, hey, interest rates near zero, or they say we're bumping it up a quarter point. So what are you expecting to happen with the market right now the way it is? What do you expect?
Well, we're a long way, Lena, from the Fed actually raising those short-term interest rates, but we're very much in the zone where we've got to watch what they say and what their updated economic projections are, because that's going to really set expectations for when they might start to raise interest rates. And perhaps even more importantly, it could put some upward influence on mortgage rates, which have been at some of the lowest levels we've ever seen in history. And so if you haven't refinanced, what the Fed says and does over the course of not just today, but the next couple of months is going to be really important. I wouldn't drag your feet on that. I would get busy and refinance, take advantage of these low rates, because the risk is definitely to the upside.
And this meeting is nothing new. I mean, they do this quarterly. They do this all the time. So what are you looking for? What do you expect to come out of there? Anything that would make sense, or would it be more like wah, 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 wah?
Well, they will issue a statement, but then more importantly, they're going to issue updated economic projections. Now, this is the first update they've released since March. Things have changed a lot since March, right? So in particular, the projections that they make internally for when they think they're going to raise interest rates. You know, back in March, most of them were saying they were going to leave rates unchanged at least through 22 and maybe through 2023. The expectation is that that has shifted forward. Just how much? That's something that everyone will be watching, and it has implications for the market. The stock market really likes low interest rates, and so if it rattles those nerves, you might see some volatility in the market. But the important thing to keep in mind when it comes to your 401k or your IRA is that the economy is roaring back, consumer spending is roaring back, corporate earnings are roaring back. All of that in the long run bodes well for the stock market. So even if we get some choppiness in the short term, just hold tight.
Okay, thank you. Which is always the name of the game when it comes to money, right? Sometimes doing nothing is best. All right, I appreciate you, and it's nice to meet you. KRIV McBride, bankrate.com. Thank you.